Alright, welcome to another episode of the Federal Church Presents Better Than Bloomberg, covering the 2023 World Financial Collapse, World Financial System Collapse, the worst ever. And this note from somebody, Miss Sika from Bloomberg, is a good one because it gives you just a little bit of how the dipshit trade will blow up all the other derivatives trades because they managed to fuck up the most plain vanilla of vanilla trades, being dipshits. So, vanishing market confidence needs an ECB pledge. And again, we were just doing a couple videos. The Reverend was just doing a couple videos on the European banking system there. But this one, let's see here. And again, they're talking about Credit Suisse. Credit Suisse is but one bank. The turmoil around Credit Suisse is gripping traders' attention just days after the collapse of SVB. For investors holding bank shares, today's European Central Bank meeting will be a test case for whether monetary authorities hold the line with interest rate hikes even in the face of financial sector stress. Again, this was written before Lagarde, like 50 basis points. The Credit Suisse crisis and Wednesday's rout across European bank shares mean the ECB can't dismiss the downfall of SVB and two other U.S. lenders as a transatlantic problem. The Swiss lenders' problems are long-standing, but there is no denying the bond market again. While Credit Suisse has had some problems, there's plenty of other fucking banks in the Eurozone that have been having fucking problems for the last, few years, especially in the big zero. But, let's see here. As rate rises and the threat of economic recession can lead to severe financial sector stress. Authorities will have watched with alarm as the stock 600 banks index. Again, I don't know why this hasn't gone to fucking zero yet, or isn't a limit down every few fucking hours at least. But Europe's best performing sector at the start of March erased most of its year-to-date gains in the space of a few days. And again, the smaller banks, they're going to go down because they did the dipshit trade by convention. The bigger banks are going to go down with what you see in a little bit because they're the ones who write the derivatives that are going to blow up because of the dipshit trade. And they're telling people, oh no, the bigger banks will be fine. The bigger banks will be fine. No, they're going to blow up because the dipshit trade directly affects all the other derivatives those big banks, take a part of, play a part in. Europe's best performing sector at the start of March erased most of its year-to-date gains in the space of a few days. So again, these bank indices, they should be fucking going to zero. Without exaggeration. Credit default swaps, a barometer of risk, are on the rise. I mean, again, that's just but one of the many derivatives the dipshit trade will affect. The question for the ECB is whether the shakeout is merely that, a shakeout or a sign of real trouble. They're in real fucking trouble. So, BNP Paribas strategist, affirmative action, describes the sell-off as a sort of capitulation moment for European banks. I use the word dipshit. Exacerbated by crowded long positions in the sector. It's too early to say if the bull case for banks is behind us or not, but clearly price action is concerning and seeming like it would need some external support from regulators. Affirmative action plans. Positioning was indeed very extended. JP Morgan, European derivative strategist Vito Silvestrini points out that net long positions in Eurostoxx bank futures is 3.2 billion before this week's sell-off, near the highest since the Ukraine war erupted a year ago. And again, notional, entertaining amongst all the other derivatives too. bullish option trades have also accumulated, hence the overreactions to the stream. So, let's see, 100% chart. Many reckon that with euro area inflation running at 8.5%, the ECB will look through the turmoil and deliver a 50 basis points rate hike, which they did. After all, this was written before that, Lagarde recently described inflation as a monster that must be slain. Be held a monster because they're still going to print shitloads of money. A view reinforced by this week's above forecast U.S. price data. Now again, don't forget that this is unique to the Eurozone. This will be even more pronounced in the third world shithole that is America. Because there's going to be a much larger amount of fucking derivatives that are directly affected by the dipshit trade. The U.S. print showed further rate hikes are needed, but this risks more financial stability stress, says Eugenia Molotova, senior investment manager at Pictet Asset Management. Hence, we might end up with either recession if the rate hikes continue or entrenched inflation if they don't. It is very relevant for Europe as well as the U.S. Crucial point, though, is that the surge in CDS on Credit Suisse has not triggered panic about other large banks. Now again, this isn't the contagion idea that they have, like a Lehman sort of thing. This is the fact that there'll be dipshits all over the place, and those large banks will be affected by the dipshit trade. So CDSs on Credit Suisse aren't going to be triggering panic about the other large banks. The dipshit trade, however, should very much trigger a panic about other large banks. Because all of these fucking derivatives that they hold, the small ones don't play this game, the small ones don't play in this arena. All the derivatives that these large banks hold are all affected by the dipshit trade. Though their CDSs to have risen, and they should skyrocket. European bank shares trade at cheap valuations and are seen as more tightly regulated than U.S. peers. The heightened scrutiny of banks for balance sheet mismatches is also a positive, investors say. We remain bullish on Euro banks. The investment case on fast-growing net interest margins is still intact. Again, they're talking about shit that doesn't matter. It's just like saying contagion from SVB. No, it's not contagion that you should be worried about. It's net interest margin, blah, blah, blah. No, it's the fact that you had a bunch of dipshits, and then now it's going to blow up all these other derivatives. So, you're talking about shit that doesn't even matter. And it's all going to fucking goddamn go to zero. Fabio Caldato, a partner at Olympia Wealth Management, was keen to invest in the sector. Regulations matter and European rules are luckily conservative, which is nice. But people were still dipshits, and the dipshits are going to blow up the derivatives, especially the big banks. However, recession worries, again, even if they didn't fuck up their own trades, there's somebody else that has to pay for being the counterparty on the hedge. However, recession worries are already driving investors out of growth-sensitive cyclical shares such as autos, banks, and retailers. The possibility this column had flagged at the end of remains today. Defensive sectors such as food and pharma are back in favor. And why not? You're going to be having shitloads of inflation for food, so at least you see that. And pharma, well, I'm sure they're all probably, wanting to kill themselves. Probably be on a shitload of fucking drugs. John Mipper, CEO at Titan Asset Management, is among those taking a defensive stance. We are now starting to see the impact of prior targeting starting to bite. That's one hell of an understatement. We remain concerned that these ripple effects, there's going to be a lot of ripple effects of the dipshit trade, will continue to spread across the economy, especially amongst those derivatives. So, how those fucking indices with those banks don't turn to zero, or at least limit down every few fucking hours. I don't know. Must be the hopium, or a shitload of money printing fucking adding fuel to the fire. But again, don't forget to donate. Wallet down below, Bitcoin wallet down below. Your donation is your salvation. You're not going to be saved. Not from this mess, especially if you don't donate shitloads of money. But Jesus is watching you. You don't need that money here for earthly possessions. You need to be concerned about heaven. Donate.